So now I came up with this chart to help illustrate the concept of high risk, high returns, low risk, low returns. Of course, there could be investments that have mitigated risk and yet providing relatively higher returns. So it really depends on what's your comfort level. Now, whether you only want developed countries like Singapore, Australia, UK, Japan, or whether you are okay with semi-developed countries, in my opinion, is like Malaysia, or even developing countries that generally offer higher growth and returns, like Thailand, Indonesia, Vietnam, and Cambodia. Now, here are some of our Bangkok properties. We have about 25 different projects at the moment, spread over various locations in Bangkok, and ranging in price from below 100,000 Singapore dollars to even over 300,000 for prime locations like Tong Lo, Ekamai, and Siam Ratchatheri. These are the 3 non-pen developments that we are marketing, all by Singapore developers. We only recommend Singapore developers and in good locations like these. Our development in Bali under the Citadines brand at Berawa Beach. We also have a resort investment in Phuket, Thailand under the Windham brand. And these are 2 of our resale apartments in prime Tokyo, in Shinjuku and Shibuya. Okay, they are very attractively priced, very affordable versus other Tokyo apartments selling at double or triple the price. And we only have a handful of these remaining. We also have 2 prime location, award-winning mixed developments at the heart of KL, very near to the Petronas Twin Towers, both by Singapore developers listed on SGX. And right now you can enter with relatively low cash outlay because of the rebates promotion, where the developer is paying 20% for you. These are the 2 landed house developments we have in Gold Coast, or in Australia we call them the land and house. Very affordable compared to Singapore landed houses or even houses in Iskandar, and they provide rental guarantee as well. In Melbourne, we have 3 luxury apartments near the Yarra River, Glen Waverley, and Melbourne Central, where RMIT University is. In Manchester, UK, we have 2 luxury apartments, one near the Victoria Station and the river and the shopping belt, and the other one is a stunning 52-story skyscraper near to the Spinning Fields CBD. In London, we have over 30 developments by renowned developers including Barclay, Tullymore, Oxley, and Anthology. And we have many choices for you spread across London from zones 1 to 4. And you'll find that London prices are now similar to Singapore due to the favorable exchange rate. So you can own a London apartment with less cash outlay and earn stable rental income. Okay, rather than buying a car which is a depreciating liability, we all know by now that it is better to invest in an appreciating asset that will appreciate over the next 10 to 30 years, which is property. So here I've illustrated for you, if you were to buy a second Singapore property as a Singaporean, okay, the cash outlay you need is about 485,000, so that will be out of the question. If you look at Australia, for example, you only need a 10% down payment. Okay, with the legal fees and FIRB, we're looking at about 43,000, and then the balance 20% upon completion or TOP. Together with the stamp duty, we're looking at a total of about 168,000. This is assuming a 70% loan. You look at Cambodia non-pen, we have different payment schemes. This is one example, the only one in fact that has a progressive payment scheme. So 20% down with the legal fees, you're looking at about 29,000. Progressively, 2.5% works out to be about 3,575 a month. And then on completion, the balance 8% plus stamp duty is about 19,000. Okay, for Thailand, the payment scheme again varies between 15% to 30% down payment. In this example, it's 15%, so that's $18,000 down. And on completion, assuming a 70% loan, another 15% is payable. With the registration tax, we're looking at about a total of 38,000. Okay, so with 50,000, you can buy a Thailand property in Bangkok. Okay, with assuming a 70% loan, or assuming if you have more savings before the TOP. You could actually also buy Cambodia because the down payment is only 29,000 and you just pay monthly 3,575. Okay, the third option is Australia because of the down payment is only 43,000, but upon completion, then there's extra cash to top up, and this is assuming a 70% loan. Fourth option, actually, you'll notice you could actually buy a unit in Phnom Penh as well as a unit in Bangkok with additional cash top up, of course, thereafter. So in this case, even with just 50,000, you realize that you could possibly own up to 2 additional properties. Okay, so what can you do now with 100,000? Again, for Singapore, it's out of the question. But if you look at Japan in Tokyo, for our apartments, you could actually own one, assuming you get a 70% loan, because the cash outlay is about 98,000. Or in Malaysia, the cash outlay is about 68,000, assuming a 65% loan. Or in the UK, the payment scheme varies. Some are 10% down payment, some are 20, some are 30. In this example, we use a 20% down payment. Okay, and then upon completion, another 20%, assuming a 60% loan. So what are our options here? Okay, firstly, you can buy Thailand as a previous example. In this case, you can also buy Japan and Malaysia. Okay, or assuming if you have more savings before the TOP, that means over time, you could also invest in the UK, or a combination of Phnom Penh, Bangkok, and KL, or another combination of Phnom Penh with Bangkok and Melbourne. Okay, so you can see option 5 and 6, you could possibly own up to 3 properties with 100,000. Okay, so in this example, you could possibly own up to 4 properties. Okay, but always ensure that you are comfortable financially and that you have done your best case, worst case cash flow analysis that I shared earlier before investing. Okay, and of course, you can also strive to add 1 property to your portfolio every 2 to 3 years instead of buying all 4 at one go in this example. Okay, this is just for illustration. Let's do another simple poll. What do you think of the COVID-19 situation now? Okay, A, it seems to be getting better. B, it seems to be getting worse. It looks like 3/4, okay, 76% of you feel that the COVID-19 situation is getting better now. Okay, so let's continue to see what is the impact of COVID-19 on the property market. Okay, we know for one that the stock markets have crashed, okay, in March between 20% to even 40% across the world. Good news is that they have recovered somewhat, but of course still very volatile and risky to invest in. How about real estate prices? Okay, why do we not see a crash? Remember at the beginning I mentioned that real estate is stronger, okay, in capital preservation. And why I feel prices won't crash? Because property owners will not fire sale their properties at super low prices unless they are desperate. Okay, for example, if they lost their job and they are unable to service the loan. But you find several countries, including Singapore, have government measures in place to stabilize their economy. And even if there are one-off fire sales, here and there, it doesn't affect the overall prices, as other owners who are not affected will not be looking to sell low. Now for projects, buildings under construction, we know that construction costs are going up due to the lockdown and additional safety measures that construction companies need to now put in place. And developers will typically not reduce their prices below their minimum break-even price, as they know that prices will go up again once the pandemic is contained. In fact, developers overseas are in no hurry to sell, as they have no 5-year time limit. But we do have some very good buys, very good offers now, with discounts as high as 20%. So for those who are financially stable and able to turn this in this crisis into opportunity, it's very good news for you. Okay, so let's take a look at where we are now with COVID-19. If you look at the new cases worldwide, they are still increasing daily. Okay, but if you look deeper, actually the majority of the cases are in the Americas, mostly in the US and Brazil. The numbers at the bottom here you see in Southeast Asia appear to be stabilizing. Okay, let's dive and look at Singapore. I think we all know the situation well in Singapore. Many of the cases are work permit holders living in the dorms. And good news is that our circuit breaker has worked to flatten the curve for community cases, as we are working from home and learning via webinars like today. And if you look at the UK, the curve seems to be flattening recently. Next, we look at Malaysia. The curve also looks to be flattening. Same case for Vietnam here, as we can see, the plateau. Japan is also quite flat. Okay, Thailand has flattened the curve, yes, for quite a while now. Okay, same case for Australia. It's been about 1.5 months since the curve has flattened. Okay, and similarly the case for Cambodia, as you can see here. Okay, so as you can see, for the 8 markets that we have, the situation is quite well contained.